Everyone, welcome. I am the CEO, as Alex mentioned, and the co-founder of SATO Technologies. We are a Bitcoin miners. We started in 2017. We are publicly listed now on the market in Canada on the TSXV under the ticker SATO, like our name, and like Satoshi Nakamoto, the inventor of Bitcoin. And we are currently building a Bitcoin company that is based on Bitcoin mining, possibly AI and HPC, and possibly L2/software based for Bitcoin. But right now we are focusing on computing power and mining Bitcoin. Everything I will present during the presentation, of course, is for forward-looking information. We are in a market where building infrastructure for Bitcoin requires CapEx, and CapEx can be found in the form of equity or debt. Bitcoin miners in general, publicly Bitcoin miners are using both instruments in order to grow their computing power so that they can make more Bitcoin. Today, we'll tell you a little bit about our company. It's fascinating. It's a great a story about how we started small and grew over the years. We will tell you about our financial for the full year of 2023. They are audited by one of the best firms you can find on the market for Bitcoin miners, Grant Thornton, Raymond Chabot from Quebec. This is where we are mining from. And at the end, we will take some question and answers. Again, like Alex mentioned, please feel free to put them in the chat already, and we will address them at the end. So who are we? Today we are running 20 megawatt of energy. It's in Quebec. Now we're north of Montreal, and we have one of the best setup you can find for Bitcoin mining. We have access of energy, this 20 megawatts, that we transform ourselves. So we are transforming energy into computing power, and we are doing it ourselves. So we run our own electrical infrastructures. We developed our own data centers. We bought our own miners that we manage ourselves. We developed our own software to be performant and efficient with these miners. At the base, we have one of the best electricity price you can find in the world, around 4.3 cents a kilowatt hour. For Bitcoin miners like us, it's very important. Why? Because 80% of my cost, of our cost, of Bitcoin miners' cost around the world is about electricity. We need electricity to transform it into Bitcoin. And by running the computers, this is how we secure the Bitcoin network, the hash rate. You probably heard about this. This is what we produce with our computers. They are only specifically making Bitcoin or producing this hash rate. Those miners is something that we run in our data centers, and we are super efficient at running them. So our base price of electricity is extremely great, but it's not enough. To succeed in the industry, you also need to be efficient and performant and how you manage your computers. And it shows on the right with the numbers. Over the years, we've been able to grow our revenues. We have been able to grow our operating cash flows. Last year, you will see, and we will go into the details, we are operating cash flow positive for the full year. We also did net profit positive EBITDA in a market in 2023 where the Bitcoin were not that great. Today, with our mining power, to give you an idea also, with 20 megawatt, last year on average in 2023, it means that we were having getting the reward 0.1% of all of the Bitcoin network. So we have miners, bigger miners that are bigger than us. Companies who are also public, we call them the senior miners, most of the time listed on the NASDAQ. And you have junior miners like us. And we qualify, and we're trying to qualify to become a senior by deploying our infrastructures. If we go into the details of the cost structures of how much does it cost to make a Bitcoin. So, for most of the people today, buying Bitcoin or acquiring Bitcoin is their main objective. We've seen the news about the ETF. You have seen the news about more companies like MicroStrategy buying Bitcoins on their balance sheet. I believe it will continue. So more and more companies are trying to acquire Bitcoin. It's a great way to acquire Bitcoin. You give fiat money, $72,000 today, and you get one Bitcoin. There is another way to make Bitcoin. It's to mine the Bitcoin. We make a Bitcoin in all cost of production for $20,000, around $20,000 in January. And here we're showing the details between the cost of electricity, the operational cost, and the gross profit that is coming from there. In January, the Bitcoin was not at 72 like it is today. So everything, if you think that the Bitcoin, and when we see that the Bitcoin appreciate by 20%, for us Bitcoin miners, it means automatically 20% more revenues, more margin, and everything we put, we make after that. It's an extremely good setup in our industry. Again, the way to succeed is to be efficient. Now we have something called halving. You probably heard about it. It's very à la mode. Lots of people are talking about it on Twitter or X. What is it? For those of you who don't know as much as how Bitcoin mining works, just a quick word. Every 10 minutes, the blockchain is producing a new block that is a ledger of all of the transactions that has happened on Bitcoin every 10 minutes. So we produce this block, it's inscribed, it's forever, it's traceable, it's very secure. Satoshi Nakamoto, the inventor of Bitcoin, to make sure that the network could work for a long time with no interruption, he had to invent a way to give money to Bitcoin miners to run these computers that will secure the network. So every 10 minutes when a block is inscribed on the blockchain with all of the transactions that has happened on the Bitcoin network, the block produces a reward. This reward has an anti-inflation mechanism in it, which means that the supply of Bitcoin or the rewards produced every 10 minutes is divided by 2 every 4 years. Since the beginning of Bitcoin, this event that we call the halving, the reward is cut by 2. Today, every day, you can see on the right in my presentation, 900 Bitcoin are produced by the blocks, and this is what we share between Bitcoin miners. This is what the hash rate is important. I told you before that we had in 2023 around 0.1% of the total hash rate. It means that we get 0.1% of this 900 BTC. A bigger hash rate will take more of the pie, but the pie is unique, and the pie every 4 years divides by 2. This is a halving. What does that mean for Bitcoin in general? What we have seen in the past, I'm not saying it will replicate this time. Every time is a different time with Bitcoin, but at least for the last 3 halving, one in 2012, one in 2016, one in 2020, the supply of Bitcoin being divided by 2 made it so that the price of the Bitcoin increases, usually between a few months before the halving and after the halving. What are we going to see this time? I don't really know. Nobody knows. Nobody has a crystal ball. It's uncertain information about the Bitcoin price. What is sure is that the halving will reduce the reward by 2. And for Bitcoin, usually it's a good news. And that's why people are excited about this new halving coming. For Bitcoin miners and for us in particular, it means that we made the right choice to be focusing on efficiency, because today the cost of production of a Bitcoin being around $20,000, $21,000 US, it means after the halving, for us, this cost will double. Simple, it's mathematic. The reward is divided by 2. Our cost of production is multiplied by 2. But in the current market condition, you can see that we are still in an extremely good position to continue growing and to make more margin and gross profit when we mine Bitcoin. And at the end, I think this is where we will win. We will win, and we are winning. Why? Because we are efficient. And in the market, sometimes you hear usually bigger miners, they play their game, it's normal, but they say that the bigger will win. It's not true. What is true is that the most efficient will win, and the most efficient are winning. The one who are efficient in Bitcoin mining, it's not impossible to make. You need to run your own energy, have no intermediary between your energy and your computing power. It costs less money, and at the end, a difference between paying 4 cents a kilowatt hour or 7 cents or 8 cents or 12 cents, it's a huge difference when 75-80% of your cost of production is coming from this source. So people who pay electricity too much, who have a fleet of miners who are not efficient, a data center who are not efficient, all of these people, this is where we will see after the halving what's happening. It's true that there is a question mark, but this is also true that with the price of Bitcoin that we see today, everyone will be in good condition to continue mining, because in some part of the years of bull and bear market that we can have, that we see sometimes, that we have seen in the past, that we might continue seeing in the future. We always see Bitcoin miners being able to continue deploying infrastructure, but being efficient is the most important part. We have also an history. This is a company I co-founded in 2017. Originally, we were 4 people. We wanted to have a project because we are passionate about technology. I'm an entrepreneur myself. I've created 5 companies since 1995. Some people say I have a small French accent. I say it's true. But we started in 2017. We were running 2.5 megawatts and 7.5 megawatts, now 20 megawatts. We continue building in every cycle, the crypto winter, the COVID, the last halving, you name it. And we continue growing our operation, being efficient and mining more Bitcoin and more Bitcoin and more Bitcoin. And now we are ready to go to the next step. We have a vision on how to build over the next 4 years. What kind of energy we want? Where do we want it? What kind of computing power we want to plug? Should it be only for Bitcoin mining? Should we add AI or HPC? It's also very interesting for people like us. There is this new trend of data centers that needs to be built for the nascent industry of AI. They need computing power. We Bitcoin miners, we have a knowledge. We have a knowledge of transforming energy into computing power, doing it for Bitcoin mining or for AI. Yes, you have differences, different kind of type of data centers, but it's kind of like the same kind of deal. So we're looking into that part. We're also looking into something very interesting that is happening right now, which are companies like us who are building on top of Bitcoin. So we are not only mining Bitcoin and making Bitcoin. We want to have a digital assets on our balance sheet. But we're also developing and trying to find ways to develop software on top of Bitcoin, which is a way for us to find more ways to get more fees. Because when you are an efficient Bitcoin miner, you need to think after the next halving and the next halving. I mean, and by the next, I don't mean the one coming in 30 days. I'm talking about the one coming in 4 years and then in 8 years. So we have a way to grow. We've been able to show it how we were efficient at doing it in the last cycle. And we believe we'll excel in growing. Of course, as I said earlier, it's all forward-looking information. It depends on how much cash we raise, in debt or in equity. It's a business. You need to deploy capital if you want to grow. There is no mystery in there. Now you can ask me, because I'm telling you a great story. It's great to be Bitcoin miners. It's great to be in our position. We are in the starting block from a junior to maybe become a senior, exactly like every Bitcoin miners who are now listed on the Nasdaq with multi-billion valuation. They were at the same seat than us in the last phases of growth. The first miners were listed in 2018, I think, with Bitfarms, with Hive. Then you have the new miners being listed in 2021. We were listed at that time on the stock market in the TSXV at the last minute of the bull. So the equity market, after being listed, were pretty close at that time. But now it's a different environment. It's an environment where we can grow. Why our stock price usually in Bitcoin miners, when you look at publicly Bitcoin miners like us and our stock price, most of the time we are following the Bitcoin. Most of the time also we are overperforming Bitcoin. But sometimes, like right now, we are decorrelated from the Bitcoin price. And we can see that I'm talking about a very short time frame. It's the last 2 weeks. It's very, very short. It seems like a long time, but Bitcoin miners, we think money is going to more ETFs to Bitcoin, to companies like MicroStrategy who are holding different kind of, Bitcoin. It's still a possibility. I believe it's not going to continue for a long time because people will realize the benefit of mining Bitcoin. There is also a position of wait and see for the halving. Some investors might say, you know what? In 38 days, the reward is divided by 2. Let's see what's happening. There is this quote, for example, from Warren Buffett. He said, when the tide retracts, we see who is swimming naked. We will see with swimming naked, but even so, with the Bitcoin at that price, I think everyone will swim and there will be a no tide, but we will see. When is it going to come green for Bitcoin miners? Of course, like Bitcoin, I can tell you when. I believe it will happen. And I believe that efficient miners like us will show to the investors that we're making more margin, we are more efficient. And I think this is where we will win in the next weeks and months when the market wants to realign maybe with the Bitcoin. I'm not going to go too much in the details. We did a presentation, our financial for 2023. I was telling you before, audited by Grant Thornton. We make a quarterly live stream. Come to our website, www.bysato.com. You can subscribe. We will let you know when we present in detail our quarterly financials. This time, and it was yesterday, we published our full year audited 2023. As I was telling you, excellent results in our company. It shows how precise we are in managing our company, making sure that we make the right choices depending on the condition. Do not forget, Bitcoin at the beginning of 2023 was quoting at $16,000. So it was a different world, and even so, we showed that we were able to increase our revenues, increase our gross profit, making net profit and a cash flow positive of more than 1.8 million. Our data centers makes money. Same thing on the EBITDA, even adjusted EBITDA, we can show also the computing power profit. It's really the mining profit we make. It's increasing. Of course, we have more computers. We are deploying infrastructures. We have a cash position and using our digital assets that is opportunistic. We are often asked the question, what do you do with your Bitcoin? So you have different kind of strategies on the market, and I think all of them have their pros and cons, and we've used both or all of them before. But basically, one thing that is important is that 100% of the money we make are paid in Bitcoin. This is the proceed of the Bitcoin mining or the earning of the Bitcoin mining from using our hash rate. But at some point, we need to pay electricity with fiat. So we need to sell Bitcoin to pay for electricity, to pay for different kind of operation. But it's always a balance because we believe in Bitcoin. We are believers in what has been created with Bitcoin and everything that relates to Bitcoin. So we believe also that the price of the Bitcoin will appreciate. So we want to have a hodl strategy. It's called a hodl strategy when you hold your Bitcoin. This is what MicroStrategy is doing. This is what other Bitcoin miners are doing. I think there is more and more companies who will start to do the same thing. They will start adding Bitcoin to their balance sheet. It's an edge against inflation. It's against fiat. Lots of reasons why people will more and more adding Bitcoin on their balance sheet at the company level. At the personal level, it's another discussion. But for us, it means that we need to be opportunistic, using our Bitcoin to be able to grow. It's always something that is interesting to do, and we've done it in the past. But you can see that our cash is evolving. In 2022, 2023, it was more difficult years. We did not know exactly where the Bitcoin would go in terms of price, so we took less risk and put more in cash. But now the Bitcoin that we have, because of the price increase, is also looking bigger for the beginning of the year. So we are reporting also every month our production data, also available from our website. And in this production data, we are giving you the number of Bitcoin we make, the hash rate we run, and this kind of things. Capital structure, I'm going to go quick on this. One thing you need to know, it's a company, again, I co-founded. Our first founders, investors, we still own a good chunk of the company, probably more than 60%. It's a plus and it's a con. It's true that we have less volume on our stock because of this, but it's also the benefit that you have a team working for the long term. To conclude, I think I'm good in time. Look, we're Bitcoin focused. We have potential to do for AI and HPC. We've been doing it since 2017. I'm not saying we've seen it all because it's never the case, but we've seen a lot, and we know how to grow in the next years and next months. We've been showing that we were efficient, high performance. We're publicly listed. It's a great tool to be able to raise money with the public market in debt or in equity. I believe, again, following the steps of other Bitcoin miners who've done it before us. The way they were able to deploy capital was very interesting, and we're ready for the next phase of growth. So it's a good time. And that's it for the presentation. We'll go with the Q&A with you, Alex. I'll let you back taking it. Yeah, so in Bitcoin mining, you can have efficiency with at different levels. The first level is with your mining rigs. It's what kind of computer you buy. Everyone can achieve efficiency at that level because it's really provided by the manufacturers, the chip or the ASICs, as we call it, for mining Bitcoin. They are more performant. It means that at the computer level, the performance is how you dissipate the heat from the calculation chip. That's really about the performance of the computer. But it means that with the same amount of energy, the miners, the rig, the computer will produce more Bitcoin. So there is a race to go to a new efficient miners because you can produce more Bitcoin for the same amount of energy. It's better for your business. This cycle sometimes of miners, they come in numbers. They are produced by 2 or 3 companies, maybe now a little bit more. There has been announcement from other Bitcoin miners developing their own chip. It's really interesting, this part, but efficiency can be found at the computer level. The other way where you find efficiency in what we do is how you manage your energy. Because it's also often too often talked about what price you pay per kilowatt hour. Fine. It's great, but now behind it, how much of the time can you run this electricity in your data center? This is what it is about for Bitcoin mining. And the way we transform our energy and the way we put it into the back of our miners, we transmit it to the back of our miners. We need to transform it from different kind of voltage to the right type of voltage, is also creating efficiency. Another way where we get efficiency is in the data center in itself. So you see it start at the chip level, then the computer level, then the data center level, the energy level. At the data center level, the way we have done it to be efficient is to use the less energy possible for our cooling. Good things, we're in Canada. It's cold most of the time of the year. We're using air cooling, and we have developed our own solution, a regular also solution, but we filter our air. We make sure we can take the air from outside that is cold. We mix it with hot air produced by the Bitcoin miners, and we make sure that our miners get at the same temperature all the time, all year round, around the same temperature with the same kind of voltage at the back of the miners. By doing this, not only we have performant computers, but we have performant operation, and that's also why we're able to produce more Bitcoin or more efficient than other Bitcoin miners. Another part where we are efficient and where Bitcoin miners are efficient is in the software part. You have ways where you can upgrade, downgrade your Bitcoin miners with adding different kind of software. We have also developed our own software to be able to manage our own fleet of miners. We run around like a little bit less than 6,000 computers in our data centers. We have developed our own software to be able to get data on those computers, being able to repair them quickly, fastly, finding data about what needs to be changed and all this kind of thing. This is also where you get performance. And at the end, when you make a Bitcoin or earn a Bitcoin, every step from the energy to the Bitcoin, you can win a little bit and tweak a little bit, but it's a big change at the end. This is what it is to be performant. It's not only about the computer or the price of the electricity, it's how you run your operation. Look, it's it's really difficult in the Bitcoin business in general to predict anything, and in Bitcoin mining even more, because we have this price of the Bitcoin that is really changing very fast. And also we have another aspect called the difficulty, which is, as I explained before, the number of Bitcoin miners trying to win the block at every 10 minutes. That is also changing and difficult to predict, even so that we have seen an increase. So predicting like revenues in fiat is very difficult. What I know is that with our data center, actually, we make a certain number of Bitcoin. We are continuing to make Bitcoin with this mining center. And depending on the price of the Bitcoin, we will see a spike or not into our revenues and our margin. But that's only if we were having and keeping this data center. It could be a possibility for us. We're just going to make money with it and we sit. That's not who we are. We want to continue building. Once you are efficient, once you're performant, go big. We're at this phase. We're at this phase where we think we know how to find new energy sources to mine more Bitcoin, to develop more computing power. It takes time. It's not an overnight development. Other people have done it before. Publicly listed miners now on Nasdaq. We're following their steps. So that's really the plan for the future. I can't announce anything until I show that we can finance it. But what I know is a kind of like vision on how we want to build in the next 4 years and what kind of centers we would like to see. Well, the first thing I would say about this is that when we raise money via equity or debt, we create value for the shareholders. We are trying to create a positive dilution because yes, raising equity or debt not, but equity at least it creates dilution. But in our business, we are in a business where we need to deploy capital to grow. And usually when we put this capital at work, like we are doing with Bitcoin mining, it shows extremely good results. And that's how shareholders are making like their profit at some point. So we are keeping that in mind in order to grow. We don't need to raise money today. So look at our results. We don't need to raise money. We are good by ourselves. We can continue like this. See how it goes in 3 months. We're not like that. We're a builder. We want to go bigger. We think it's the time to go. It's always the time to go. I would have preferred, honestly, to start 6 months ago or 8 months ago when it was a bear market. In a bull market like we are today, everything changes. The energy is more difficult to get. The data centers are more difficult to get. The price of the miners will increase. More people will want to try to buy them. More people will want to try to do whatever deals they can to get energy. We've seen it before. In this environment, in this ocean, we think that we know how to manage our ship to grow, following what we've learned for the past 6-7 years running this business, and also looking at our peers that have been able to do it. Mm-hmm. Sure. So it's two different things. I mean, AI and HPC for us, Bitcoin miners, it's mainly about infrastructure and building data centers that could host the chips, the GPUs for AI and HPC. Maybe at some point, people like us will use the GPUs for their own benefit. We will see. But right now, it's more about like building infrastructures, being able to host the computing power that the world needs. The software L2s building on Bitcoin is another subject. It's a very interesting business. It's nascent. It's not as big as mining Bitcoin or buying Bitcoin, but it's a new way to use Bitcoin for more people and more people. So you have what we call L2s, which are a layer 2 of the technology. Bitcoin network being the layer 1. So all of the transactions that you do, this famous blog that rewards Bitcoin, that's the layer 1. But by developing a network called layer 2 that is working with a layer one, you're able to develop different kind of solutions that can be suitable for more people depending on their needs. For example, you could use a Lightning Network, which is one of the technology of the L2s, which is allowing you to use your SATs, which are Bitcoin. This is the smallest amount of Bitcoin you can find in a Bitcoin. They are numerated in Satoshis. But you are able to use SATs to do peer-to-peer exchange between people very fast and almost at no cost, and also at no cost of the energy. It's a network that doesn't use a lot of energy to functionate. You have different kind of usage about different kind of L2s for different kind of usage. There's another one called Liquid. It's really interesting. It's been developed by Blockstream, a very known company, because Adam Back, the founder, was cited into the white paper written by Satoshi Nakamoto. And you have now this new trend of L2s being built. It's building on Bitcoin. It's finding new ways to work with the layer one, work on Bitcoin, but also develop software. For us, it's interesting to work on this part because, first of all, it's part of Bitcoin. It's understanding how Bitcoin transaction is built. What is an UTXO? How do you manage it at specific level? How do we work with ordinals? So it makes sense to understand bigger than just running computers. But we also see it as a way to make more fees. Because if we can find ways building infrastructure or developing solutions for people to use Bitcoin, not really in L1 because it's already working, but in L2, we will find new ways to make revenues. And that's what we want to do is build on Bitcoin, developing software, providing software for more people who will want to be based on Bitcoin. Why? Because the layer one is an extremely secure and safe solution to use Bitcoin. There is nothing better in the world, completely decentralized. It has never stopped for the past 15 years. There is no CEOs, there is no marketing companies. It's an extremely solid and robust solution for doing what it does. And that's why also the Bitcoin is appreciating in terms of value, because people realize it's better to have Bitcoin than gold or even than stock or even than whatever you want. So we're believing in that, and we are developing software. We'll see how it goes. It's long-term thinking. It's about the next halving. It's about also the next halving. It takes time. That's where I'm coming from. In my world, I was developing and designing like application. We made a huge game of $150 million with my brother Matthew, who was also a co-founder of this company, SATO. I know it takes time, but it could be very much valuable if you really find a market. What I also know is that today, when I plug a computer in the wall, which is what of kind we do at the end, it makes Bitcoin. So that's where we want to grow. This is where we want to go as fast as we can, and we believe we're well suited to go there. Thank you very much. Bye-bye.